So in today's session, we would be working on some more numericals on the preparation of reconciliation statement, and let's look at the question. The third question goes like this: from the following figures, prepare the reconciliation statement. And in this particular question, what they have done is they have given us the details in a tabular form, and from these details, we are expected to prepare the reconciliation statement. So let's go about with the preparation of the reconciliation statement. Okay, we prepared the format of the reconciliation statement, and let's go about with the preparation of the reconciliation statement now. What has been given to us is profit as per cost accounts. We've been given the profit as per cost accounts, and from the profit as per cost accounts, we will have to go about with the preparation of the other. We will have to go about calculating, and we will have to prepare profit as per financial accounts. And we also know that the profit as per cost accounts, this is 50,000, and we will have two separate sections. So here there are certain transactions that we will have to add. So there are certain items that we have to add, and there are certain items that we have to subtract. There are certain items that we have to add, and there are certain items that we have to subtract. Now let's go through the items one by one, just to see where exactly will it fall. So the first item given to us in the question is the marketing overhead. So if you look at the marketing overhead, the expenses that are mentioned in the cost account concurs with the expense which is given in the financial account, which means there is no room for disagreement. The expenses given as for these two, it is the same. Okay, it is exactly the same. So because of which there is no disagreement. Next is provision for bad debts. Okay, next is provision for bad debts. What is meant by provision for bad debts? Provision for bad debts would be what? Provision for bad debts would be a financial expense. So that you will have to subtract. So this is 5,000. Okay. Provision as for bad debts would be 5,000. Then you have factory overhead. Okay. Then you have factory overhead. So factory overhead, now what has happened is there is a disagreement between the factory overhead that is reported as per cost accounts and financial accounts. So factory overhead as per cost accounts is 8,500, and the factory overhead as per financial account is 7,000, because of which there is a difference between the amount. So here this will be 8,500 minus 7,000. So what this means over here is that overhead is over-absorbed. Okay? Factory overhead is over-absorbed, and what we are doing over here is we are taking the difference between the two amounts, and the difference between the two amounts is 1,500. So this has to be added. The next item given to us in the question is director's fees. Okay. The next item given to us in the question is director's fees. Now, director's fees, we know it is a financial expense. So any financial expense, please remember, we will have to always subtract. Okay. We will have to always subtract. So director's fees, this is 2,000. Okay. Director's fees is 2,000 that we have subtracted. Okay. So that has been taken care. Okay. That has been accounted for. The next item that is given to us in the question is income tax. Now we know that income tax is again a pure financial expense. Okay, it is a financial expense, and it is exclusively financial in nature. So for that, what we have to do is we have to financial expenses here in this case, it is not reported by the cost accounts, it is considered only by financial accounts. So that we will have to consider. So income tax, and the amount is 15,000. If the amount is 15,000. So that also we have come to an agreement. Now, the next item that we have in the question is rent charge for own premises as per cost accounts. Now, whenever we deal with cost accounting, we may come across similar expenses. Such kind of expenses are referred to as imputed costs, or they call it notional costs. Now, what are imputed costs? What are notional costs? Imputed or notional costs are those expenses where there is no actual outflow of money that is taking place. Yet, you're still reporting it there because you will have to get your cost details accurate. Now, what happens if you do not include this rent component? Because you have to remember it's your own premises. Since it's your own premises, you really don't have to pay any rent for it. So, for example, it's something like this: you're staying with your parents, and your parents, they have their own house in Bangalore, but because you're staying with your parents, you really don't have to pay a rent. So that is an imputed cost. There is no outflow of money that is accurate. So if you do not have these imputed costs or notional costs included as a part of your cost analysis or your cost calculation, what can happen is your costing information would not be accurate. Your costing detail will not be complete. It will not be perfect in nature. That's the reason why we go about with these notional costs. So this notional cost, and we know that whenever you have any kind of expenses which is shown only in cost accounts, what you will have to do is you will have to add. So rent as per cost accounts. Okay, rent as per cost accounts, and then the rent as per cost accounts, this is 6,000. This is 6,000. The next item that we have that is given to us in the question is depreciation. Now, with respect to depreciation, again, if you notice, there is a difference between the depreciation that is reported as per cost accounts and a difference between the depreciation that is reported as per financial account. So because there is a difference between the two, what is happening over here is depreciation, we have to go as per the depreciation which is given as per financial account. So depreciation, okay, and we know that depreciation as per cost financial accounts, this is 12,000. However, depreciation as per financial accounts, this is 750. Sorry, this is 11,250. Okay, this is 11,250. So when we are preparing a reconciliation, we need to consider only the difference amount. Okay, we need to consider only difference amount. Why? Because as per cost accounts, we've already factored depreciation of 11,250. But the actual depreciation amount is 12,000, which means you just have to consider an additional 750 more. So that has been considered. Then the next item that we have is share transfer fee. Share transfer fee is a pure financial expense. Okay, this is a pure financial expense, and the amount works out to be 1,000. The amount works out to be 1,000. The next expense that we have is admin overhead. So admin overhead, in this case, what has happened with admin overhead is that it is under absorbed. It is under absorbed. It is under absorbed. So here, when we are preparing for the admin overhead, we just have to take the difference between the two, and the difference between the two is 8,000 and 5,000, and the difference between the two is 3,000. Okay, the difference between the two is 3,000. So that is what happens when it comes to admin overhead, and we notice that admin overhead is the under absorbed. So with that, we have completed with the placement of the expenses. Now we have to go about with the total. Okay, now we have to go about with the total. So, okay, so let's go about with this. So what I've just done over here is I'm calculating the subtotals. So the subtotal of this section, it works out to be 7,500. 7,500, I have to add with 5,000, and the total works out to be 57,500. This part of the section, let me just quickly calculate. This works out to be so this works out to be 16,750. So I think I made a mistake. Okay, this works out to be 26,750. So I'll just cross-check this calculation. Just cross-check this calculation. So 5,000 plus 2,000 plus 15,000 plus 7,750 plus 1,000 plus 3,000. This works out to be 26,750, and 26,750 I will have to subtract from 57,500. So 57,500, when you subtract 26,750 from that, you will get 30,750. Okay, you will get 30,750. Now, what you have to remember over here is, what is the significance of this 30,750? 30,750 is your profit as per financial accounts. This is your profit as per financial accounts. Okay, so 30,750. Okay, this is your profit as per financial accounts, and we have completed the preparation of the reconciliation statement, and this has been completed.